Hey everybody, good weekend. Here is your market minute for Sunday, the 1st of October. So this being the first day of the new quarter, let's talk about price levels that are important and are going to help us understand what's going to happen into this quarter based on whether these price targets are hit or not. So first of all, what we have to understand is the context of what's going on here. We have a larger time frame uptrend, which is broken higher from the bear market. So this ended the bear market back in May to June, and we headed higher on a big swing to the upside here. Now we're going through a retracement, and we've retraced almost all of this, which is somewhat normal. But if the bull is going to continue in the fourth quarter, it needs to do so fairly soon from this point. So we've dropped about 8% to this point. We could still logically get away with maybe about 10% of this and still retain the bull. But again, a quick dip, and then it's got to get on with it into the fourth quarter. Otherwise, what we're seeing is a transition into that sideways and volatile character, which transitions into the next corrective pattern. So again, I have to emphasize to you folks, it's like we're not trying to predict the future. What we're trying to do is to frame in the price action to understand levels that will let us know which side is winning. So in other words, if we start to see the price trading back above the August and early September highs, then more than likely the bull is back in play. Otherwise, if we see a weak bounce into October, which sets up a lower high and then it rolls over and hits new lows, then we're not out of the woods yet. In fact, we may be transitioning into the next corrective pattern as we get into the fourth quarter. So what are those levels? Well, first of all, what we can do is we can look at fib retracements from the latest swing from the top to the bottom so far. And what those show is that attaining the 4,400 level, just above the 4,400 level again, would imply that we're going to at least fill in the triangle. So if the price is able to bounce above 4,400, chances are pretty good that the bull is back. But again, it has to break above 4,500 to erase the current downtrend. Something else that we can look at is the ABC correction. So if we think that this is an Elliott 5-wave pattern to the upside, and then this is the ABC correction, how deep does the C wave have to go before it's finished? Well, a lot of times what we'll see is that the C wave, and again, I'm not an Elliottician, I'm just reading this off the site of their definition of what a C wave is, but a C wave can be the same as the A wave, and right now we're a little bit more than that. So we can also go up to a 1.618 extension of the A wave. And so the way we're going to do that is measure the A wave and then take it up to the top of the B wave here. And we can see that the 161.8 extension is right around 4,100. So that to me represents probably the lower limit of what we might see in the short term. So this is the potential for the lower limit in the short term is about 4,100. And that 4,100 level is very close to the point of control or the high volume node for the volume profile over the last year. And that's around 4,125. So volume profile says 4,125 is the low. Elliott wave says 4,100 is probably the extent of the C wave to the downside. And so I think we'll find out fairly fast as to whether or not we're done with this, because we could be seeing 4,150, 4,125, or as low as 4,100. Okay, those would be a little bit of a surprise after this weekend, especially with the continuing resolution getting passed. So I think a lot of people are going to expect to see a positive day on Sunday night, Monday. But if that doesn't happen, we could flush one final flush to the downside. And I think if the price were to get down into this area, it would cause a capitulation and a very rapid rebound from here. So again, to me, 4,400 is really the key level for the price to get above. If we are going to see a positive fourth quarter, if the price is unable to get above 4,400, we'll probably stay in this corrective pattern, and it may even expand as we get into the fourth quarter. And of course, the current Darvas box or the decision point is based on these reversal candles that we have, which is roughly, this is about a 100-point box right now. So it's about 42.40 up to about 43.40. So if the price is able to break above this current box, then it may be heading up to 4,400 to test that. Otherwise, if we see it break below 42.40, then watch how it reacts at the 200-day moving average. But if it does break through there, we're probably heading down to one of those targets that I talked about, somewhere in between 4,100 and 4,150. The challenge with this type of market is to ignore the news and focus on the short-term price projections that we have right here, those short-term price targets, and see how the price is moving based on those. So follow the market. Don't try to predict what the market's doing. All right, folks, that is it for this weekend's report. Thanks for listening, and we'll see you in the next Market Minute.